on your Zoom dashboard. We will unmute your line and take your questions in respective sequence and within the scheduled time. For us to be able to identify you, please ensure your name is visible as your first name, last name, followed by your company name. Today's presentation and a replay of this call and a transcript will be made available on the company website subsequently. With this, I'd like to request Mr. Vijay Shekhar Sharma to kindly initiate the call.
Thank you, Rishi. Hi, good afternoon, everyone. I am so happy to talk to you all about our loan distribution business, our flagship of financial services, and our key business area that we have been talking about since last few quarters. In fact, you've seen the national and global macro and various guidelines from regulators. So me and Bhavesh and Madhur, when we were discussing, we took a call that how about giving a formal update to each one of you. So this is unsequenced, not a very regular thing that we do, but we assume that it'll be great to talk to you directly. So here it is that I have Bhavesh sitting next to me, whom I give the line now, and then we will have interesting Q&A in due course.
Thank you, Vijay. Hi, good afternoon, everybody. So let me straight away jump into the presentation. I'm sure there'll be a lot of questions around what we intend to talk about it. I think there are multiple levels of information we wanted to share in the wake of what's been happening generally, not just in the recent 1 month, but over the last maybe about 4 quarters around the developing macro situation per se and the overall understanding that we carry through our payments insight on how a credit distribution should be modulated and scaled up. So in that direction, I'm happy to inform you that we have now decided to expand a loan distribution business for high ticket loans. Now, this is basically coming on the fact of 2 things. One piece here is that both our merchant loans and personal loan business has now been in existence for more than 3 years, and we've seen reasonable amount of maturity of customer base because we've given away maybe around close to 1 million personal loans and about 500,000 merchant loans and growing, which have nicely repaid, etc., etc. And there is a good stickiness to the portfolio of users who come on our app seeking different kinds of credit. And we were finding that there is a reasonable large demand, both from loans which have matured without any delinquency available for renewal, and for new loans itself, where the customers and merchants were seeking a higher amount at a lower interest rate because the creditworthiness is far, far superior. And they would obviously like to see a best product being offered by them, and which we were not offering. As you know, we were largely offering up to 2 lakhs, sometime in some quarter 3 lakhs of personal loans and merchant loans also in a similar range. So now we have decided, looking at the demand, and we started to do some pilots in Q3 with 1 or 2 of our lending partners. And we saw that there is a decent demand wherein we can offer high ticket loan distribution opportunity to our lending partners and hence also expand our revenue pool. So this is the first thing that we want to inform, that yes, we are further expanding a loan distribution business, and we will now be doing loan distribution for high ticket loans, where we will not be having any collection-led upside, but we'll have a distribution and servicing-led upside, and we'll talk more about it as we start to build this business. The second thing I wanted to draw everybody's attention on the table on the right. This is basically to answer the questions which have been coming to us in our one-on-one meetings with various people, and generally what we've been hearing about all the noise around less than 50,000 loans. I wish to remind everybody here that our less than 50K portfolio is a very small portfolio or negligible portfolio historically. And as it can be seen from here, that in personal loans, it was earlier used to be close to 7 to 9%, which has now dropped to between 3 to 5%. Actually, to be right, it's about 4%. And this portfolio is a very, very negligible part of the portfolio that we've been doing in personal loans in our system. Postpaid loan is a portfolio which is predominantly less than 50,000 loan. So on the back of the macro developments and the regulatory guidelines which is there, we've decided that we would like to, in a calibrated manner, keep scaling the 50K loan portfolio, especially postpaid loan, down, and focus our energies on building personal loan and high ticket personal loan, merchant loans and high ticket merchant loans, while we'll continue to do postpaid. And it may not be the same growth level that we were doing earlier. It will be significantly lower than what we were doing earlier, but it will be a product that will continue. And our lending partners, namely Aditya Birla Finance and Sumitomo, erstwhile Fullerton, who've been big supporters of this product, continue to disburse, continue to manage this portfolio along with us. And we've had discussions with them that looking at all the regulatory guidance and some bit of noise around it, while our portfolio had no problems and issue, and we'll talk more about that in slide 2, it is better that we scale this down and index ourselves in offering something which is more meaningful in the current environment. And as and when the environment becomes better, we can always scale it back. So it doesn't mean that this product will be discontinued as it being conjectured in the market. It will be continued, it will be available, but will be available to a cohort of users where we believe we can upsell much, much better, and overall portfolio quality will be significantly better, even in the current context of the macro, which is currently expected to be same for a couple of quarters. The third piece is merchant loan. As we all know, merchant loan is a business which is not necessarily covered under the new regulatory guidance of risk weight, etc. It's a loan for MSMEs. It's a business loan. We have been very, very focused on growing this business. This business continues unaffected of any kind, either on commercially or otherwise on the risk side. And we are committed to build this business furthermore, and we shall continue to build this business even more in the wake of the fact that this is a business that everybody is seeking to grow more. Overall on a take rate, yes, because of mix change that we will have that postpaid loans as a contribution to overall loan, which used to be around 50%-ish. If you were to disburse, let's take last quarter an average of 5,500 crores, we were doing postpaid loan of 50% and the remaining 25 each. Because contribution of postpaid loans will go down to overall disbursement, there will be a mathematical change to take rate. Otherwise, there is no impact to take rate on a negative side, even with this risk weight increase. Let's go to the next slide, please. Yeah, so this is more data I just wanted to call out. See, the risk calibration, I just want to remind everyone that we've been talking about the risk calibration because we have a lot of insights on our payments data. We could very clearly see that less than 50K and otherwise in general, the shorter tenure personal loans, etc., were started to show some signs, which we started to calibrate right from quarter 3 FY 2023. So it is basically 1 year behind back we started to calibrate, which has resulted in good stat. I want to draw your attention to the table on the right. So Q3 FY 2023, if you can see, we were publishing our portfolio metric for all the 3 businesses, postpaid loan, personal loans, and merchant loan. And Q2 of this year, also we published, and we will obviously publish in Q3 when we announce the results in January. As you can see, that postpaid loan, which is less than 50,000 loan in particular, from 1.1 to 1.3 expected credit loss on a 30-day product, it has actually dropped down to 0.65 to 0.85. And it is expected to continue to see this drop even in Q3, right? So the question is always asked, then why would you slow down? As I said, we respect what is happening in overall because we have a very small portion of what happens in the overall macro industry. We want to respect the overall industry and overall macro what is happening. And hence, in consultation over the last couple of months with the lending partners, we felt it is better that we slow down because there could be something that we don't know, which is happening in the industry while our portfolio is not showing. Anyways, it's a very small part of our profitability. As you know, postpaid loans are not the highest profitable product. Merchant loan, personal loans are the very, very high profitable product. So it does not necessarily change materially any revenue or EBITDA impact to our business. So rather than managing the disbursal, we've always committed ourselves to manage portfolio. So hence we have decided to slow it down. Personal loans and merchant loans continue to perform as good as what we had been mentioning in the past. And in fact, merchant loans trending towards performing even better than this expected credit loss rate of 475 to 525. There is definitely much better portfolio performance we are seeing on merchant side than we are seeing on consumer side. So we will definitely try to do a lot more there. So in a summary, our focus now on the recalibration of business is very clearly on high ticket, slowing down on less than 50K. More importantly, we will further index ourselves on making sure that how we can mature our cross-selling engine far better because almost 60% plus of our all new loan disbursements every month come to existing loan customers with various lenders who perform very, very well as a repayment. So we'll try to grow that even more from 60% to maybe 70% or beyond. We've been continuously sharpening our cohort-based strategy, especially in consumer loans, at which cohorts have started to show any lead indicator amber behavior because we have a lot of insights on these users, not just on credit, but also on the payment behavior and what is happening at particular geo hash. We'll continue to do so. we will, as I said, we reduce the less than 50K, but more importantly, we'll rationalize locations where we were offering these products based on the payment trends and broader industry portfolio performance of lenders. So we are now seeing what the overall portfolio is behaving, et cetera, in the marketplace, and what the payments data is saying, which is leading us to make sure that we are focused on areas where economic growth is better and payment growth is better, because we believe those are lead indicators to credit growth. We'll continue to do that. Lenders have a very good understanding of risk of what is happening on the customer leverage and number of loans, because they get access to the bureau report. So they are giving us a lot of insights at their end and what they would like to underwrite and how they will underwrite. So that is a calibration that we have further strengthened. And we continue to scrape the bottom, because that's some point that we've been doing, that we every month look at which is the bottomest cohort in a decile-led strategy, and we just keep scrapping. So all in all, our focus will always be on portfolio, and we will make sure that the portfolio origination happening through Paytm, we are doing collections or we're not doing collections is irrelevant, but portfolio quality is fantastic, and we will continue to walk that path in the near future and obviously in the long term. Let's go to the next slide, please. So the third information I wanted to give you is that we are expanding a lender base. This was a question that given all the noise that we are clearly seeing on unsecured credit, are we getting enough and more newer lending partners that we had promised that we'll get? I'm happy to inform you that we will add at least 2 more NBFCs, large NBFCs, and 1 bank. All the 3 of them are in various forms of UAT, CUG environment. They are not in agreement stage. So over the next 2 quarters, we believe we'll be able to get them on board, both for personal loans and merchant loans. And even for credit card, we will be adding 1 more bank into our kitty. So from a new lender arrangement, we continue to believe that the opportunity of Paytm platform is well appreciated by the larger ecosystem, and hence our credibility to be able to offer high quality credit to various lending partners continues to be very robust, which is leading to more and more partners looking forward to partnering with us. And we are very grateful that this opportunity is coming our way, and we'll continue to strengthen our existing partners also. In the same breath, I want to mention that none of the existing partners have either stopped any line of business or said that they don't want to do any business. We continue to thrive with every lending partner. Obviously, we calibrate with each partner how much they would like to do. And because we're adding more partners, there is diversification. Our lending partners are also adding more fintech, so there is diversification. So share of each lending partner may vary, but we continue to have very strong relationship with all our 7 existing NBFC partners and our existing bank partners on credit card issuance. None of the partners has moved away or has optically gone ahead and shut a business, etc. There is a reduction that they may have called out, which is a part of portfolio balancing at our end and their end, which will continue. But there is no capital constraint of any kind that we are able to see in the system. There is obviously the focus, as we said, on merchant loans around with PL and the high ticket size. And in that regard, you will see a lot more activity on the Paytm app and otherwise. And we'll be more happy to inform you about the developments in this area in the next quarter when we talk about more. Let's keep moving. So in summary, the high ticket is something that we are expanding our portfolio to, which was something that we would have done, let's say, in next year, AOP planning, etc. But we are preponing it given the macro and the overall regulatory guidance that this is the right way to go forward. We will reduce the less than 50K to a level that is comfortable to us, comfortable to our partners. We don't know a number, but yeah, there will be a reduction that will happen, and we will see as to how much reduction is enough and how much high ticket growth that we would like to build on the system. And we will continue to add more and more lending partners. The 3 of them in the pipeline will fructify over the next 2 quarters, as I said, maybe earlier to that also, but that's the outer limit that we want to give. And there are more and more partners that we have in the system, and we will continue to work with them to make sure that we are able to give them higher quality credit to the risk appetite they have. So this is all that I had to say. I'll pause here and be open. We all will be open to answer any questions. And I'm sure there'll be many questions. We'll be happy to answer those questions for you. Thank you.
Thank you, Bhavesh. Our first question comes from the line of Manish Adukia of Goldman Sachs. Manish, your line is open. You can now ask the question.
Yes, hi. Good afternoon. Thank you so much for organizing this call and for taking my questions. So, I'll actually start off with the first question, Bhavesh, which you partially addressed in your opening remarks as well. So, on postpaid, maybe if you can just provide a little bit more color. So, you're saying that you're scaling it down, but you're not shutting the product completely. So, how should we think about the forward? Like scaling down to what extent? Will you not sign up new users
Sure.
going forward, or even
Yeah.
existing users may see some impact? And if you can just confirm, there was a press report a couple of hours ago.
Yeah.
Any merit to that at all whatsoever, or it's just speculative? So that's first question, please.
Somebody, you can't see me, but I can only have a small smile. I don't think there is. I'm a postpaid user. We've got 10 million people who are postpaid users. There is bottom scraping that we do every month as we do. We've accelerated bottom scraping in consultation with our partners. So there could be a cohort of users who otherwise may have continued in a nicer environment. Today may not be able to see their overdraft limits of postpaid loan being renewed, and hence maybe conjecturing that the postpaid product has been shut down. That is completely not true. Postpaid loan product continues to be there. We have calibrated it to make sure that the users who can use it, merchants who can use it, that has got calibrated. But the numbers will remain decently large. I can't give you a range of a number, but if today we are doing 3,000 crores, it may come down to about 40-50% lower than this, but it will oscillate in that range. And we will see after a quarter how the environment changes, if you want to grow more or if you want to cut more. But at this point in time, we believe the number could be in that range of an outcome. But eventually, we will know the number only a couple of months down the line exactly, because it's not a math. There are users and there are merchants. So when you actually handle users and merchants by not giving them enhancements or giving lesser enhancements or be tighter on controls of who gets a renewal or who doesn't get a renewal, the outcome of that can only be estimated. So I'm giving you a broad estimate. So product continues. The lending partners who are supporting the product, Aditya Birla Finance and Fullerton, who's now Sumitomo as a new name from 30th November, continues. And we will add another partner in this area in the near future. So that continues.
Thank you for that, Bhavesh. And in terms of, let's say, this bottom scraping of users that you talked about, is it broad based across the existing two lenders, or one lender is seeing more impact than the other?
It's absolutely great question. Thank you for asking. It is, see, we don't have a different risk policy between the lending partners in any product. The commercials could be a bit different, but risk policies are never different because it's based on collectability and stability at our end and intent and ability at lender's end. So there is no risk arbitration we do. It is about which lender had onboarded which user earlier, and hence they will have a larger share versus somebody else. But absolutely no. So it'll be proportionately largely coming down, but not somebody getting more and somebody getting less.
Right. And you quantified that number. So I just want to confirm it. You said 40 to 50% impact on value of disbursal on the postpaid product,
Yeah,
roughly.
disbursement is what we believe we will like to slow down, because that's where we figured out, right? Lenders have figured out that there is a multiple trade lines that they're carrying. They may have gone 5 DPD to 2 months back, while they never went 3 DPD, 30 DPD. So we're actually getting ultra conservative in this space, because we just want to be very sure that while we are not seeing any lead or lag indicator data, as you can see from our delinquency trends, if the overall environment is talking so much about it, there could be something that we don't know. So it's better to be conservative today, and we can always open it up because lines will exist. It's just that people may not be able to renew or expand the lines, which was happening for growth. So we can always take a call, couple of quarters, or maybe let's say a quarter away from today if everything changes.
Understand. The second set of questions on the personal loan business. So, of course, you're starting to do this for the sub 50,000 ticket size product, but given what the RBI has asked and on the unsecured lending, the focus as a whole, what is the probability that this spills into the personal loan portfolio also in the next, let's say, 6-12 months?
So I'll answer this in two parts. There is a risk weight increase, which leads to calibration by each lender as to how much unsecured personal loan they would like to book incrementally. The good news is that we today have 5 lending partners who are booking personal loan. So dependency on one lending partner is not very material. right? So we have enough and more lending partners, and amongst the three that we're adding further, at least two of them will be booking personal loans also, including a bank. So there is enough and more appetite to book good quality credit. So if the quality of credit is good, but the lender does not have an appetite because of the risk weight and increase in the cost of capital for them, and hence depression of ROA, then and hence they want some number to move here and there. Yeah, we will be able to move here and there, but Paytm doesn't get affected.
Understood. Just last question from me before I just jump back in the queue. I'm sure there are other questions as well. At the end of last quarter in the earnings call, you'd given certain guidance both for personal loan portfolio growth and the overall loan portfolio growth. Would you want to revise that now? I mean, up
Yeah,
or yeah.
so the growth, merchant loan will continue to robust. Personal loan, because we will add high ticket, you will see growth on personal loan also. While the what I say is personal loans where we have distribution and collection incentives, that portfolio will be low growth or stable. They'll not go to negative growth, but the high ticket personal loan will add to the growth in the system, because that's a new line of business that we have set up last quarter, and postpaid will now get recalibrated lower. So overall disbursement, if we were trending at, let's say, 5,500 to 6,000 crores a month, that number in merchant and personal loan will still show growth. Postpaid will show minus 50%, 40%, whatever it ends at.
Right. And this minus 50 would start showing immediately, just to confirm.
Because a 30-day product. Yeah, it's a 30-day product. It may not start showing immediately. It will show some, because we started to cut in the month of October, then we cut something in November, and now we're cutting in December. So October was some cut, November was some cut, now December more cut, January could be maybe further expansion, because we will find as to how the behavior of delinquency, because 30-day product. So there'll be calibration. So Q3 may reflect much lower, Q4 will reflect much sharper, but only in postpaid loans.
Thank you for taking my questions. All the best. I'll jump back in the queue.
Thank you.
Hello. Hi.
Hi, Vijay.
Hi. I have two questions. One, with as you slow down this postpaid, this 30-day loan product, do you worry about consumers who still have outstanding on postpaid, but are not being given a new postpaid loan for a new consumption activity in the next 30 days? How should one think about that part in the next 30 days for people who are existing users and are being bottom scraped? That's question one.
Yeah. So Vijay, I think it's again a very good question. We don't do anything dramatic, because it is calibrated, and in that calibration, I just want to say, because the 30-day product, customers have to repay in the first 7 days, and if they don't repay in the first 7 days, they anyways go to delinquency. I can give you, because we're sitting on the 6th, we have not seen any material change, actually no change, hardly 0.5% change here and there, on the way the trends were when we were not bottom scraping as aggressively as we are doing today. So from a portfolio outcome perspective, if that is your question, I don't think there is any portfolio outcome challenge because of not removing the postpaid limit. The guy will not repay it back, because anyways it is not a cash out loan, right? It is at a merchant. So it's for the consumption. And in fact, this activity will maybe further strengthen our belief that the quality of credit that we were originating for partners was very robust. So as and when we believe the macro is back to normalcy, we could further try to scale up.
Got it. And my second question is, if I go onto my Paytm app and if I'm not a consumer of Paytm Postpaid today, right now, in terms of brand new users into Paytm Postpaid, that will almost very dramatically slow down. Is that how one should understand
dramatically
this?
slow down. So we used to originate about 350 to 400,000 new postpaid accounts every month. That if I was to give you the breakup of that, how much, so as you saw in the chart number 1 that I presented, about 70% were below 50K and 30% were above 50K. So the idea is to operate in cohorts of new acquisition also, which are very, very comfortable in the current macro and the overall guidance that is available in the system. So yes, it will not be 350,000, but it will also not be zero. I don't know number yet, because funnels will play out, but yeah, that number may also drop down by 50% or maybe a bit more than that. But people will still be able to apply and get a new postpaid loan if they're credit worthy.
Got it. And one last question, Bhavesh. What kind of impact this has on the customer acquisition engine for the personal loan business, for the higher ticket size loan business? Because a big chunk of these customers are older customers of postpaid, right? So
Good
if, from
question.
a 2 to 3 quarter perspective, how should one think about that?
I think again a great question, Vidit. So in our so as you actually kind of answered that question, these people who are high quality remain to be a postpaid customers, continue to be originate for postpaid customers, right? So the cohort, whatever the cohort is, will whose lowest risk and high value and has a higher propensity to be cross-sold a personal loan or a credit card or whatever the case may be. I can very confidently say that that cohort will continue to enjoy the facility. There will always be some edge cases. I just want to confess because when you do an exercise in which you want to be tightening the policy, there will always be an edge case of 5% users who generally are very good but may not continue to be renewed on postpaid limit. But by and large, if I can say, our upsell funnel coming out of postpaid will be largely unaffected for the users who we believe in this environment should be given a high ticket personal loan or a credit card through our partners.
Got it. Perfect. Thanks, Bhavesh. Those are my questions.
Our next question comes from the line of Sachin Salgaonkar of Bank of America.
Thanks, Rishi. Hey, guys. Just 3 questions from my side. First question, Bhavesh, we're only talking about 2 companies like Aditya Birla and Fullerton or Sumitomo.
Yeah.
So the question out here is this generally coming from those partners versus you guys? And the reason I'm asking is we saw one more fintech today announce a decision to shut down because Aditya Birla pulled down. And the extension of that question is, are we going to see a similar change of approach by other partners eventually?
Sachin, I just put it in the context of the other fintech because that fintech was of our friends. They were looking out for buyers since a year before because they were looking to merge into another company, but that merger couldn't happen. So I don't think that their action has anything to do with what call we are doing or anything else. They have been in market to find a partner for a long time. So
which I completely get that. It's just that media article said that just because Aditya Birla pulled out of it, that acted as a last straw or a catalyst to sort of shut down.
I wonder how and where this has come from. You heard us explicitly talk that, so I hope that clarifies.
Okay, got it.
What Vijay is saying, Aditya Birla Finance, and because you are specific, and I'm sure you can and will and should check with the lending partners, does 3 lines of businesses, postpaid loan. They continue to do postpaid loans in a similar measure what they were doing earlier. Obviously, the reduction that we've collectively agreed that we should do, the reduction will happen for them, but they will continue to support the product as they were doing earlier and grow and materially support the product. They continue to do personal loans, which is unaffected, and they continue to do merchant loans, which is unaffected in this business. And even for other lending partners, to your questions that can they come back and what is lender led? I think every decision that we do on loan distribution has to be lender led because at the end of the day, they're taking the risk. It is their customer, but it is always a consultative process. When we started to cut down in Q3 of 23, I had gone on record to say nobody was at that point in time saying that there is an issue and why are you cutting, because there was no news around it, but we could see early trends that the things are not going. So we cut. That time lenders were not asking us, but we were asking them that we should cut, and we did what we did, and we continue to do so. In postpaid loan also, we were very clearly working with lenders, and because this time there was a regulatory guidance available to them, and generally the macro data that is available to them, the less than 50K loans are seeing multiple trade lines, etc., and delinquency of in the market, not on Paytm, but in other loans, they may be originating with other fintechs or otherwise. It is better that we slow it down and calibrate our focus on high ticket, which is what we respect always, and we did it. So can they do it for can other lending partners do? I think the simple answer is we are continue to add more lending partners, and our existing lending partners continue to support the business. So I don't think that assumption may hold true, but yeah, anything can happen in the future, but I don't think that could hold true today.
Thanks, Bhavesh, for articulating that. The second question is on, as what you, last line, what you pointed out, incremental lending partners. we are talking about one bank and two large NBFCs.
Yeah.
Is it fair to assume that in this market, they'll focus a bit more on the merchant loan side or the 50,000 and above ticket size versus postpaid as well as below 50,000 personal loan?
So you'll be a bit surprised that this conversation that we want to focus on which product hasn't changed even after what has happened in the environment in the last 30 days, because these agreements got signed 6 months back, 7 months back, and integration going on. So there has not been any conversation that we will launch not this cohort or that cohort. So that I just want to make that clear, because it is not that something is now started to change. Other piece here is among of the three lending partners, one lending partner is explicitly for merchant loans, and the remaining two lending partners are available to us for personal loans. Some of them will do high ticket and low and medium ticket. Obviously, there is hardly anybody doing less than 50K today, and neither are we doing. So it will always be all above 50K, but it will be personal loans with two more partners.
Got it. And last question. Now there are two parts which will happen or impact your book. One is the scaling down, which you sort of quantified in terms of a 50% decline in postpaid. And second part is the scaling up because of it's a relatively new business.
Yes.
So the question out there is, how could we, anything you could help us to quantify the impact in the near term and the slightly longer term? Near term in the sense that first, should we see a couple of quarters numbers being not as great versus your average run rate of 5,000 to 6,000 crores, and then things could sort of meaningfully pick up in a meaningful manner. Anything directionally you could help us?
Yeah, so I think I answered that question in the previous ask, that the postpaid, because it's a 30-day product, used to demonstratively have a larger value optics on the 6,000 crore number. Almost 3,000 crores of that was 6,000. Give or take, if that number was to come down to 1,500, I'm just giving one off the back number. It could be more, it could be marginally less, but let's say in that range of 1,200, 1,500 crore number. So that 1,500 crores will go away from 6,000. So you're left with 4,500. That 4,500 will have 3,000 crores of personal and merchant loan, which will grow. So yes, in the next quarter, you will see the run rate of 6,000 crores drop because of postpaid loan, and some compensation happening by addition of merchant loan and personal loans, both on the existing business and the new ticket business. On a longer arch, if you take Q1 to Q4 of next year, yeah, it will be more or less compensated, albeit with some more growth coming in, because high ticket business is a very large ticket business. Even with lesser number of loans, you will do more. On a revenue side, I just want to call out very clearly that, as you know, postpaid was the lowest take rate business, followed by PL, which was closer to 4%, and merchant loans more than 5%. So from a revenue impact perspective, while the optics of disbursement could be a bit lower, but revenue impact will be very, very marginal and more than enough compensated by the expansion to high ticket, etc., and other revenue items that we will talk more about in Q3 of other financial services.
Got it. So just to sum up, maybe one quarter impact here and there, but from second quarter onwards, you should see revenues picking up because of this change in strategy.
Yeah. So lending revenue, what you're saying is right, but overall, I don't think there'll be any material impact, because overall there are multiple engines at Paytm, not only just lending. So we have payments and we have other financial services and commerce. And as I said, that we would like to talk more about it after Q3 on other financial services and payments business, which obviously is showing very healthy signs of growth and trends on profitability.
Great. Thank you. That's it from me.
Thank you.
Our next question comes from the line of Piran Engineer from CLSA.
Yeah, hi. Good afternoon. Thanks for taking my question. Am I audible?
Yes, Piran. Hi.
Yeah, hi, Bhavesh. Bhavesh, I'm just a bit confused, to be honest, because we've anyway been doing bottom scraping of BNPL customers. That's been our strategy. And we've still always seen growth.
Yes.
We used to add 4 lakh customers per month. Now we may add maybe 80,000, 1 lakh. I'm just putting a number.
Yes.
So why is it that our disbursements will halve then? I think growth should slow down, but why should there be minus 50% growth?
Good question. So there are two parts of this piece. Bottom scraping we were doing earlier also. And if you see postpaid loan growth till the time we were declaring monthly disbursements, and then obviously you see last 2 quarters, postpaid loan GMV growth was anyways getting calibrated, right? Earlier it was growing 20-25% every quarter. Then we brought it down to about 10-12%, and we brought it down to about 7-8% last quarter. So now the difference is this time that there is a clear understanding that we carry that there is less than 50,000 rupees, which is 70% of postpaid, seems to be showing trend in the environment, not with us. I want to repeat because we are declaring our data very, very clearly. I don't have market data, but there is a lot of noise around this in the environment. And our lenders, because they have visibility in their books and overall book, clearly feel that there is some building of stress happening in their other portfolios and the general bureau report, etc. So it's better to calibrate it. So if you see today, out of the 10 million postpaid users and let's say 6 to 7 million who are active, there is 70% of them who will be carrying limits below 50,000 rupees. So that portfolio will be materially impacted by the decision because we will not renew after 30 days their limits or reduce their limits, right? Given the understanding that we carry at this point in time. And similarly, when we are originating new, we will originate lesser, as you really called out. So a combination of that will mean that your GMV growth will drop by the percentage that I gave you as a range bound number.
Okay, so when you're talking about bottom scraping, you literally bottom scrape most of the sub 50,000 rupee BNPL
Not most, but you could say if I was bottom scraping
a majority, okay, if not most.
10% of a cohort, I could bottom scrape 40-50% of cohort because somebody who has a limit of 10,000 rupees and was spending, let's say 4,000, that person could be brought down to a lower limit or may not be allowed to renew because we believe that the person may be running more trade lines in the market and has maybe a situation of higher stress building up because that's a visibility that lenders carry because of bureau depth, etc., etc. So yes, that's the reason this will drop. It's not that high quality customers will be asked to shut down postpaid or the postpaid will not be renewed.
Got it. And what will you see in the environment which will make you, if at all, change or reverse this decision?
I think the 2 or 3 parts, if you ask me honestly, there is definitely the fact that if interest rates start to come down, and generally we believe that the leverage that the customers are having to go through because of higher inflation, higher interest rates, is start to soften. There'll be early trends, and if you do start finding lead indicators in our payments data, that we are currently finding insights on payments data which reflect on a lead indicator basis that these people are doing okay or not doing okay. If those macro trends start to become positive, you start to open up the product in consultation with the partners if they're comfortable over the next couple of quarters.
Got it. And then that
the product, as you understand, Piran, so it can be managed very, very effectively depending upon how does the environment change. Unlike a personal or merchant loan where you have to take binary decisions, here you can be more calibrated.
Got it. But so if I were a customer today of Aditya Birla, now you've stopped my line. Tomorrow the environment improves. Just hypothetically, tomorrow the environment improves. Can I be given to another lender if Aditya Birla still does not want to do the business?
Oh, no, that will not be okay. So that is a contract.
So it's basically up to them then.
No. So we can give them if Aditya Birla Finance, as an example, because we're making Aditya Birla in the center. I don't have a permission to talk on their behalf. But let's say we have 3 lending partners on postpaid loan, or we have 4 lending partners on personal loan, etc. Any lending partner decides not to do a particular cohort of users or a business, they have to give us the approval to offer that customer to somebody else. If that was the case, and we have an approval, we'll do. But if they were to decline that user on credit risk, obviously we will not offer it to somebody else.
Got it. And just last question now on personal loans. So we've been doing that 1.5 lakh rupee personal loan, sort of
2 lakh.
business.
Yeah,
2 lakh. Okay, 2 lakh. Now we're talking about 5 lakh, 6 lakh. Like, firstly, what are the yields that you're offering? And secondly, why would a customer, such a high ticket customer come, to you versus directly to his bank, his or her bank?
Yeah, so Piran, same philosophy. We are clearly seeing today, and I can give you a broad data on this piece, that if, let's say, we are doing 1,500 crores of personal loans in a month, the various lending partners could be approving closer to 2,500 crores, right? So there's 1,000 crore that is getting approved but not being disbursed. When we were actually working with partners to see what has happened to them, we found a reasonable good share between 30 to 40% of people who were getting credit of a higher amount and lower interest rate because the credit worthiness was fantastic from somebody else. And we then felt that the people are generally coming to a platform, they like a product, but instead of maybe a partner because we have a restriction of offering by our design of a product that we don't want to offer more than 2 lakhs for 24 months. Somebody is seeking 4 lakhs for, let's say, 4 years. But after taking an approval, they figure out they not got 4 lakhs. They got only 2 lakhs for 24 months. And as they don't take it from us, they want to take it from somebody else. If that somebody else pricing, etc., is available on our platform, they would take it from us. So we tested it out and we found very good results. And when I say very good results, it's not that we tested out on for 10 crore rupee disbursement, etc. I'm talking about AAA disbursement. Okay. And after testing it for almost 3 odd months and seeing that there is a genuine demand because the product and experience that we build for such cohort of users is fantastic, we felt that now it's a time that we should open up this segment, given definitely the environment also and the opportunity to go forward. So it's again the same question of product and the partners you have. And here the banks would also be very interested to do, and you will see some area of interest, as I said in my presentation. The banks will participate in this area apart from the current partners and more partners coming our way who want to participate, both for personal loans and merchant loans.
Okay, so this is like a 13-14% wala personal loan, not a 24%.
I can't comment. Yeah, it will definitely not be the range that we are in, but it will depend upon the cohort, what is available. It could be 12%, it could be 13%, it could be 18%, but it'll definitely not be above 18%. So it will be in the range, which is more what is called as prime and super prime, but a higher ticket, on which the credit risk appetite of everybody is much better. And obviously the market is much, much larger.
Got it. Okay, thanks for answering my questions and all the best.
Thank you, Biran.
I would request all participants to limit themselves to 2 questions each. We are extending this call to 4:45 to accommodate more questions. Our next question comes from the line of Saurabh Kumar at JP Morgan.
Hi, so just 2 questions. So one is on this PL piece, the new PL. Take rate certainly will not be in the 5% and net at 4% ballpark, right? It will be much lower.
So we don't have 5% take rate on PL. We have a 4% take rate, as you know, on PL, about 3% upfront carry. So they will be lower than 4% for sure, because they're operating at a fine price, but not much lower, right? So on a blended basis, you would see that the take rates will be higher than what we were making on postpaid loans, but lower than what we're making in PL. So it'll be more revenue accretive versus the shortfall on postpaid loan, but not enough to personal loan current business models. I hope I could answer the math.
No, I understand that. But point is, this, I mean, if you do the math, then it's very hard to see how it can be just at 4%. It needs to be much lower, but maybe I'll take this offline. The second is just on this payment.
I just want to clarify, Saurabh, much lower is higher than postpaid, which is about 2.2, not 4. It will be in the range of 2.25 to 4. It could be 3 also at a blended basis. It could be 3.5 also, right? It will depend upon at scale. See, today the take rate of this business is higher than 3.5, all right? But it is lower scale. When we scale, let's say this becomes 500 crores a month, etc., what is the right sweet spot of take rate? I'll be in a better position. So maybe in early Q1, after Q4 results, we'll be in a better position to say what is the take rate going forward. But it will be more than postpaid loan take rate and shared lower than personal loan take rate. So it'll be in the range of 2.25 to 4%. You can actually, for argument, take between 2.5 to 3.5.
Okay. The second is basically this BNPL was also part of your payment processing, payment revenues, right? The MDR was getting captured there.
Yeah.
And so basically, what happens to your payment margins now?
No, not much, because if you remember, we used to say that our interchange is 1%, our take rate on postpaid is broadly 1%. So it was not net margin accretive. So whatever the reduction is will not necessarily impact a net margin, right? So expense of 1% will go out of the reduction in book, and the income correspondingly will go out. So on a net basis, it will not have any impact.
But even the payment revenue will slow down, right? As a result, I mean, I understand the margin will be there, but
on 1,500 crores as a give or take number, 1% is like negligible.
Okay. Got it. And just last question, is there any offset on the indirect piece in the next 2 quarters or?
There will be, obviously, because postpaid had its own costs, etc. And otherwise also we were seeing a massive amount of operating leverage. And with high ticket loan coming in, it will have a very, very lower OPEX because there's no collection costs, etc. So we will we will see some operating leverage come in, and we'll talk more about it after the Q3 results.
Okay, thank you.
Thank you.
Our next question comes from the line of Ruchit Puri at Marshall Wace.
Hey, sorry, can you hear me?
Yeah, hi Ruchit. Hi.
Hey, how are you guys? Just a quick question from me. I mean, you heard a lot of the questions earlier have been around credit quality of customers, and obviously that is coming from the fact that there's been a lot of noise on fintech disbursements. So any for the benefits of all the investors on this call, any data that you could provide on credit quality, whether it is credit score or anything like that for your customers, would be very helpful, I think.
Yeah, so Rachid, credit score of our customers is not available with us, it's available lending partners. We have a range of the credit score of our customers. We don't do any new to credit in our PL business, and we have never done that. We used to do new to credit in our postpaid loan business, which was about 20% of our portfolio, which reduced to 17%, now has gone down to 12% in the last quarter. And now almost earlier 44% of our customers had a credit card who had a postpaid loan. That number has moved to 58%. So I can give you various other metric very clearly, which suggests to you that the people who are borrowing through Paytm platform had or have a very good quality. And we are anyways being sharing quarterly metric on what are the bounce rate, what are the 30, 60, 90 plus, what's the GCL, what's the ECL. All those numbers have either remained stable or come down, right? Especially postpaid loan. So this postpaid loan decision is more an outcome of what the overall, the word that you use, noise, overall noise around less than 50,000, and the data that maybe beyond Paytm is being seen by industry and not by us, because our data is suggesting that the book is performing absolutely fine and actually becoming better. But we respect the overall conditions in the market, and hence we agreed that we should slow it down a bit and see after a couple of quarters as to how the overall environment changes. But we would not have bureau scores, etc., but that data is not available to us.
Got it. Perfect. Thank you.
Thank you.
Our next question comes from the line of Manish Shukla at Axis.
Yeah, thank you for the opportunity. So, Bhavesh, first question, as on date, how many lenders have you signed an agreement for this high ticket PL?
1, 2, 3, 4 lenders, 1 bank and 2 NBFCs. And we've taken 1 NBFC live. We are currently CUGing 1 large bank, and 2 NBFCs are under CUG starting from next quarter.
So the upper limit of yield that you said about 18% at NBFC's cost of funds, you think that product will be viable for NBFCs?
I think that, look, that actually for NBFCs to answer very honestly, but the cost of capital that we understand of NBFC is still oscillating at about 8.5% leverage cost. So there is enough and good margin in the system. And we currently believe that there is a lot of people who believe at 16 to 17% with lower credit costs and lower collection costs is a better product than really offering 20-22% in their environment. So yes, but will it be 18%? Will it be 14, 16 blended? Time will tell, but currently the number is operating at about 16.5%. It may go to 18 or it may come down to 14, time will tell.
Yeah, the other question is on the slide that you showed where more than 30% or 30% about is more than 50,000 ticket size.
Yeah.
And if we do the average ticket size math for Q2 for BNPL, that comes to about 7,000 based on the volume of loans and disbursements. So I'm struggling to get the 30% more than 50,000.
Glad you asked this question. I knew that it will come. So it is on the limit sanction, Manish. So a limit sanction average is close to 16,000. Spend is about 7,000. So the limit sanction is more 30% of postpaid loan users have limit sanctioned by lending partner more than 50,000, right?
Clear, very clear. Thank you. Yeah, thanks. Those are my questions.
Thank you.
The next question comes from the line of Saurabh Patwa from Aquest Investment.
So, thanks for taking the question. I just wanted to clarify in response to the previous participant question, you mentioned that the impact of MDR which would lose on this postpaid would not be much. But if it is 1% and we on a quarterly basis, if we had a total 9,000 crore kind of an AUM, so why do you believe that the number would be lower, sir?
Yeah, let me explain to you. So if it was 9,000 crore, 9,000 is not becoming zero. 9,000 could be whatever the number is. Let's take an example, 4,000, 5,000 crores, right? On the remaining 4,000, 1% is the MDR that we will lose, but correspondingly, the interchange also was 1%. So net margin basis, there is hardly any impact, right? So
the interchange will be 2.5%, right? Because the sourcing fee is 2.75 and interchange is 2.5, right?
One second, let me explain. So there is a payment margin and there's a loan margin, right?
Okay.
The loan margin is 2.25, which is a combination of convenience fee that we charge on postpaid loans, plus any kind of overdue interest, overdue charges that the user ends up paying. Okay. That 2.5% gets booked in the financial services lending revenue. And the 1% gets booked in payments revenue because that's the MDR, the payments team charges, because the interchange also they are paying. So overall we make 3.25 is split between the two. The 2.25 gets impacted on financial services revenue on the reduction at a gross level. The net level is very small. On payment side, the gross and net itself is net is nothing because the interchange, etc. is nothing. But the net margin, there is no impact. But on a gross level, yes, on 4,000 crores, you will not be able to show 1% postpaid led revenue on payments.
A second question also, so in the past, we've been highlighting that HDFC Bank, I think 3 quarters back, we highlighted that HDFC Bank has already partnered with credit card and at some point may be for. So what's status on that, sir? Are the talks still around?
No, so talks, the agreement we have, I had said earlier, not just HDFC, there are other banks also that we've agreement signed. There is a technology integration prioritization at their end and in our end, which is unfortunately taken more time than we expect. So we are going to take one other large bank live fairly soon, and I'm hoping to make an announcement as and when that goes live in full scale next quarter. And in particularly around HDFC Bank, our partnership with them is very, very strong, not just on credit cards, but also on payments. And we're committed together to do more things with them, including expanding credit distribution through Paytm platform, which hopefully in the near future, you should be able to see.
Thanks a lot.
Thank you.
I'll get back in the queue.
Our next question comes from the line of Arpit Shah at Stallion Asset Management.
Hello. Am I audible?
Yes.
Yeah, just wanted to understand the growth part for personal loan and merchant loans. We have already guided for 50% lower business for the postpaid business, but what kind of growth rates we can see for personal loan and merchant loan business going ahead, let's say on a YOY basis?
I think I will speak for today that merchant loans could be in the vicinity of 30 to 45%, because we believe that our right to win that area on the back of payments and our distribution of soundboxes is very, very strong and remains strong. In personal loans on the back of high ticket, we could see some growth. My sense is personal loans could grow maybe between 15 to 20% Y&Y as the things stand today. If the environment becomes better, it could be more. If the environment is not better, it could be a bit lesser. But that's a broad guidance I can give to you. But we'll be in a far better position to talk about it when we talk about this in Q1 of next year after our Q4 results. Because by then we will have a much better understanding of how the environment is changing or not changing and how the high ticket business is growing. Hello. Yeah. All right. Thank you.
Our next question comes from the line of Jigar Walia of Om Capital.
Hi, thanks for the opportunity. Most questions are answered. Just one thing, you focus on RuPay cards. Is it more for NFC, or are we looking at more innovative products or anything, or if you can?
I think RuPay cards offer an incredible opportunity. In fact, in the market, RuPay credit card is now called UPI credit card because people who have RuPay credit card are linking in large volume to apps like us, and they're making QR-led payments. So there is incredible opportunity of expanding on RuPay credit card. You've seen Paytm has one with SBI, and it is actually doing very, very good.
Okay. Yeah, thanks. Other questions are answered. Thank you.
Thank you, Jagar.
That was our last question for today. Thank you, participants, for joining the call. You may now disconnect.
Thank you very much. Thank you, everyone. Thank you. Bye.